So let me guess, you're probably thinking about buying this dip right now. Uh, you're probably nervous. You're probably thinking, oh God, I don't know if I should do it, but you know what? They say buy the dip, so I'm gonna do it. Alright, well, guys, I'm here to tell you right now that the market is not done dropping, so buckle up. And look, if you're thinking about clicking off the video, that's fine. By all means, go ahead and do so, but you will probably get in the ass in the next couple weeks, and don't say I didn't warn you, alright? That being said, let's go ahead and get straight into this. I'm going to explain to you exactly why the market is not yet done dropping, and I'm actually going to help you make money on this further continuation lower, and then I'm actually going to show you how you'll know when to buy the dip. Okay, so this video is going to be super helpful for you if you're a trader investor. That being said, you're not going to get the full benefit unless you stick with me throughout the entire video so I can actually explain these things to you. So basically what we're about to do is compare the market right now in 2021 back to 2018, and we'll be using 2018 as a historical analog to prove that we will continue dropping here at these levels. So guys, my name is Alex, welcome to the channel, and look, I know going through a couple historical charts might not sound like the most fun thing to some of you, but I promise you it's a whole lot more fun than sitting through a 12 to 20% drawdown here within the next couple weeks. So look, if you do enjoy the video and it does help you out, make sure you drop a like on it and make sure you are subscribed. I'm not going to overcomplicate things, and we're going to get straight into it now. So starting off here, 2018, the S&P 500 crashes, or really corrects, 12%. What does this have to do with 2021? Well, I'm about to show you, but pay attention to the date. February 2nd was when the market began its descent here in 2018. You see, what are the characteristics? Well, we had a rapid move higher followed by the rapid sell-off. Okay, so keep in mind the rapid move higher, that goes into the sell-off. Okay, now 2021 here, you're going to see that S&P 500 has the rapid move higher to the all-time highs, right? That's exactly what we had here in 2018, rapid move higher to the all-time highs. Okay, followed by this sharp sell-off so far, right? So we're still in the making, we're still continuing lower currently is what we believe is going to continue happening here. But once again, it's all about the characteristics. So the rapid move higher followed by the rapid sell-off here, well, that's what you're getting back in 2018. Okay, so that matches up so far. Let's keep it moving though. This probably doesn't make sense, but you'll see here in 2018 we actually dropped 12%. Currently we're only down 3.6% from the top. Okay, so just keep that in mind. And once again, if this isn't coming together and it's not making sense yet, it's because it's probably not supposed to make sense yet unless you're a genius. Okay, so don't feel bad if you're not getting anything yet. It's all about to come together, and I promise you it all makes sense here if you just give me a sec. So Amazon 2018 released earnings on this candlestick you can see here. Why is this important? Well, Amazon is also releasing earnings currently this week here on Tuesday. Okay, so basically you see so far you have the market characteristics are the same. They're pretty much at the same time of the year. February 2nd and January 27th is when we began our descent this year. And you have Amazon earnings that are reporting this week. And what happened last time Amazon reported earnings in 2018? Well, you're actually going to notice that the time that Amazon reported its earnings, that actually coincided perfectly with the market drop. So pay attention to this purple arrow here. You can see the day that Amazon reported earnings was where I have circled on both of these charts here. And well, look what happens. When Amazon reports earnings, the market begins its huge descent lower. Okay, so this is pretty crucial because why? Well, Amazon does release earnings this week. Okay, so you are noticing some similarities so far. Okay, that last time Amazon reported earnings, the market tanked, and well, it had this pre-drop already going into Amazon earnings. Well, that's what we have right now, right? You can see that here. We have this pre-drop going into the Amazon earnings. So far, you're definitely seeing some similarities, but definitely not enough to draw a conclusion up. So let's keep going from here. Now, let's actually compare the VIX. Now, if you're new to trading, you're new to investing, VIX is just a measure of fear, of volatility in the market. So basically, the higher the VIX, the bigger the moves are, the more panic selling there is. Okay, so basically, you're going to see here in 2018, look at the VIX chart. In 2021, look at the VIX chart. It's the same thing almost, right? You have this consolidation period for the VIX where it breaks out higher. Well, you had the exact same thing in 2018. Now, what I will say is our crash or our drop has just begun, and look at where the VIX is right now, 33. Back in 2018, at the crash's absolute peak, right, that 12% correction, the VIX only got to about 37, right? Obviously it did touch off 50, but for the most part, it was hovering around where we already are, and we have not even began to move lower to the magnitude of 12% like we did in 2018. So keep that in mind. We actually have a higher volatility, and we haven't even began dropping as hard as 2018 yet. Okay, so keep that in mind, and now I'm going to go over the next factor that is so similar to 2018, which is the US dollar. Okay, so US dollar goes from about $102 down to 90 or 89 zone back in 2018 before we crashed. Well, what is the US dollar doing right now? It's going from about 104 down to 89/80, getting support. Okay, and this is why we said the market needed stimulus or wasn't going to continue higher, because basically the US dollar and the S&P 500 are inversely correlated. So typically, if the US dollar goes up, the market's going to go down. If the market goes down, the US dollar is going to be going up, right? Why does the dollar go up? Well, because it means people are taking their money out of their investments and they're converting it to cash, which gives the dollar more strength, right? That's kind of why they're sometimes inversely correlated, and currently the US dollar and the S&P 500 are inversely correlated. So basically, you have the repeat dollar setup going from 104 down to about 89/90, and well, what are we getting? Support in the dollar. This strength that the dollar is getting is leading to a market reversal that we're getting right now. And so once again, another factor we have that proves how similar we are to 2018 currently. Now look, even that might not be enough to show you how similar this is to 2018. So let's go back and actually look at how much downside we have currently in 2021 in some of the main leading stocks such as Microsoft and Apple. Okay, so take a look here. You can see Apple is selling off much harder than Microsoft so far. You can clearly see this through the trend here, right? Here's the uptrend for Apple. Okay, you can see that there. And here's the uptrend from Microsoft. Okay, clearly Microsoft is a lot closer to the top of its trend, where Apple's actually approaching the bottom of its trend. So that can easily show you it's selling off a lot harder, especially if you just look at the percentage or really even the point drop, right? Apple's dropped from 145 down to 131. Microsoft has pretty much double the price of Apple, and it's not even dropped the same amount in point terms, right? So Microsoft's only dropped about 11 points from the top. Apple's already dropped about 15 points from the top, and it's, half the price. Okay, so in percentage terms, Apple is selling off much harder than Microsoft. And well, if we come back and look at Apple and Microsoft back in 2018 crash or correction, you're going to see here, Apple was selling off extremely hard. It broke through the bottom of the Bollinger Band and just continued dumping. Okay, now take a look at Microsoft on the other hand. This is the exact same time frame. You're going to see Microsoft did not sell off nearly as hard as Apple. So once again, you're noticing more similarities, that these institutions definitely hold on to the Microsoft better than they do Apple during corrective phases such as what we're getting right now. Okay, so keep that in mind. Microsoft is definitely a stronger stock during these times, but at the same time, we're just trying to compare the similarities and notice that, okay, Microsoft held up stronger last time in 2018. That's exactly what it's doing right now. So once again, another similar factor to point out of how similar this is to 2018. So guys, just when you thought I couldn't name any more similarities to 2018, you're going to see here Bitcoin crashed at the end of 2017, okay? And then what did the market do shortly after? Here, look, you can see the arrow. This is where Bitcoin crashed, and well, this actually led to a leg up higher in the market. What happened to the market? The market began its descent just 1 month after the Bitcoin crash. Kind of scary, huh? Because, well, what happened recently? Bitcoin crashed just about 3 to 4 weeks ago. And what's happening to the market? Well, the market is now beginning its descent. So guys, I've given you countless factors that line up back to 2018. Now, I know some people say, oh, but it's not 2018. Oh, but this is that, but this is that. But this is this, okay? What I've shown you is fact, okay? We have countless scenarios that pretty much line up perfectly here with what we have today. And so I know it's not 2018, but we have too many similarities to ignore. And so you see back in 2018, we had a market correction of 12%. Well, based on the similarities, based on what we've went over, we believe we'll get a 12% correction at least once again. Okay, and so I just want to go back through some of these similarities very quickly, right? This time you got actually higher volatility, you've got no stimulus, and so many matching clues. Those matching clues include Apple selling off harder than Microsoft. You've got the same US dollar setup. You've got the identical VIX setup, okay? You've got Amazon reporting earnings, which actually marks the bigger drop in the market that could be coming this week when Amazon reports its earnings. You have Bitcoin, which began its crash just about 3 to 4 weeks ago, and well, we all know what happened last time. Bitcoin crashed, 3 to 4 weeks later, the market crashed, and well, 3 to 4 weeks later, here in our current day, right now, you can see the market is dropping as well, 3 to 4 weeks after. So guys, it's just countless scenarios, countless examples of how similar we are. I almost feel like a broken record. But with that being said, if we're so similar, if things are lining up so perfectly back to 2018, well, last time we got a 12% correction. So what are we expecting this time around? A 12% correction at least. But it can actually be much worse than that because we have higher volatility, right? And no stimulus, right? And you know, we're just in a crazy time right now in 2021. You even got, you know, retail traders taking on institutions. It's just a crazy time, and that's why you'll see in so many of these slides I put 2020, and you see I scratch it out and put 2021 because I forget we're even in 2021. It still feels like we're in 2020. It still feels like a crazy time, and well, that's just another bonus to the possible downward descent we might have here. Okay, so once again, guys, I never want the market to crash, but based on our conclusion here, based off how many similarities we have, once again, I feel like a broken record saying similarity, 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 but that's how many we have, and it's almost impossible to ignore. So that's how we get our price target of 3,388 in the market, 12% correction at the least, and guys, don't be surprised if we drop even lower than that. So I actually want to leave you with 2 confirming factors or signals you can pay attention to on your own now that you're leaving this video to see, is this crash actually going to continue? So pay attention to Apple. If Apple can break through the downtrend, or this uptrend, I mean, it'll be shifting into a downtrend, which will further resemble 2018, which will further resemble a market correction that could be coming to a much greater extent. Okay, so pay attention to Apple, right? We already failed to break out through the top of the trend. Now will we fail to break through the bottom of the trend, or will we break through that bottom of the trend? Second and most important factor, guys, Amazon earnings, okay? Amazon reports here on Tuesday. If you see the market dropping after earnings, after Amazon earnings, that's just, once again, the most powerful confirmation I think you can get, because we all know what happened last time Amazon reported earnings. That's when the market really started dropping hard. And so if you see that repeat itself again, you know this is exactly like 2018. Okay, so guys, I know this can seem super overwhelming. I know you might not even understand some of the things we went over. That's why if you actually need direct help trading these things, you can schedule a 20-minute call with me. We can set up a strategy, figure this out, how we're going to help you make thousands in the crazy market environment we have now that a lot of people are going to struggle to adapt to. Okay, but we will be adapted to it, and we will be making lots of money even in the crazy conditions we have right now. And then if you actually even want me to just straight up trade for you, I can do that as well. Personal coaching, where I actually tell you when to enter the trade, when to exit the trade, how much money to put into each trade, and basically it's me trading for you. Okay, so I can actually do that for you now through the Megalodon trading program. And that being said, if you want these earnings tables sent straight to your inbox every Friday, you can actually go through that link in the description as well, and we will send you the best, most important earnings every single week straight to your inbox. So guys, it's an incredible time. There's so much opportunity, but you've got to be ready. You've got to be confident. You got to know how to take advantage, and I can easily help you do that. So make sure, if you're interested in profiting on this crazy opportunities we have currently, you reach out to me and get some help, because I'll be more than willing to help you out with that, guys. That's all we've got for this video. If you enjoyed it and you learned some things, make sure you drop a like on this video. This is an absolutely incredible opportunity. Thousands will be made, and I hope you'll be a part of it, guys. Looking forward to meeting some of you. I look forward to talking to some of you and trading with some of you. So let's rock. It's going to be a great time if you're a shark. All right, guys. My name is Alex. Thank you for watching, and I will see you on the next video. Don't forget to like and subscribe. Bye.